Imagine sending $87 worth of a stablecoin at the speed of light on a crypto rail with no KYC and no regulatory controls, offering complete privacy. This feels like a truly private digital currency. Now, if someone asks you, do you like Bitcoin, and you think of Bitcoin as a digital currency, you might respond like a certain politician did a few years ago, no, I like the dollar better. You might think Bitcoin is competing with the dollar and that the question is whether Bitcoin will replace the dollar.
Imagine transferring $8 at the speed of light across the globe on a decentralized cryptocurrency network. There's no need for KYC checks, no regulatory controls, and complete privacy essentially, digital currency that operates with the same level of privacy as cash transactions. Now, when someone asks if you like Bitcoin, it might remind you of a certain politician's response from years ago. No, I like the dollar better. You might think Bitcoin competes directly with the dollar, and that they're asking whether Bitcoin will replace traditional currency. But here's the thing, Bitcoin isn't trying to replace the dollar or any other fiat currency. It's something entirely different. Bitcoin is digital gold, a store of value that transcends borders and operates independently of any central authority. It's not about replacing the dollar, it's about offering an alternative, a hedge against inflation, and a way to preserve wealth in a digital age. On the other hand, stablecoins, like the hypothetical $8 example, offer the best of both worlds: the stability of fiat currencies with the efficiency and privacy of cryptocurrencies. They enable fast, borderless transactions without the need for intermediaries or traditional banking systems. So when you consider Bitcoin and stablecoins, it's not a matter of choosing one over the other. They serve different purposes in the evolving landscape of digital finance. Bitcoin represents a paradigm shift in how we perceive and store value, while stablecoins facilitate everyday transactions with the benefits of blockchain technology. Together, they're reshaping our understanding of money and paving the way for a future where financial transactions are faster, more secure, and more inclusive. It's not about competition, it's about innovation and the endless possibilities that blockchain technology brings to the world of finance.
Unlike traditional assets, Bitcoin offers remarkable flexibility and capacity for secure transactions. You could have 10,000 different custodians settling hundreds of millions or even billions of dollars daily, and the Bitcoin network can handle that load efficiently. Gold, on the other hand, is limited both in space and time. In the best of circumstances, gold has a steady-state inflation rate of about 2%. This means that over 30 years, the value of gold halves. Over a century, 87% to 88% of your economic wealth stored in gold would be dissipated due to this inflation.
When we talk about Bitcoin, one of its remarkable features is its ability to handle immense transaction volumes. Imagine having 10,000 different custodians settling transactions worth hundreds of millions or even billions of dollars each day. Bitcoin's network can manage that load seamlessly thanks to its decentralized and robust architecture. Unlike gold, which has limitations both in space and time, Bitcoin operates without such constraints. Gold is impractical for transactions beyond Earth due to its physical nature. Over time, gold faces a steady-state inflation rate of about 2% under optimal conditions. This means that over a century, approximately 87% to 88% of its economic value would dissipate. This inflation rate effectively gives gold a half-life of economic utility of about 30 years, making its purchasing power diminish and less effective as a long-term store of value compared to Bitcoin. Bitcoin, on the other hand, is designed with scarcity built into its protocol. With a fixed supply of 21 million coins, it offers a predictable and diminishing inflation rate that halves every 4 years through its halving events. This scarcity model makes Bitcoin potentially more resilient against inflation and erosion of value over time compared to traditional commodities like gold. In essence, Bitcoin's ability to handle massive transaction volumes and its inherent scarcity provide a compelling case for its utility as a store of value in the digital age. It represents a departure from traditional assets like gold, offering a solution that transcends physical limitations and potentially offers more enduring value preservation in the face of economic challenges over the long term. As we look to the future, Bitcoin's role in reshaping financial paradigms continues to evolve, offering individuals and institutions alike a new perspective on wealth preservation and transactional efficiency in a global economy.
Most of the world's wealth is held by people who don't fully understand what Bitcoin is. Many Bitcoin advocates have been intentionally confrontational or inflammatory, engaging in debates about whether Bitcoin is meant to replace banks, currency, government, or other institutions. However, the essence of Bitcoin is digital capital. The addressable market for digital capital is estimated to be between $100 and $400 trillion. Therefore, once you grasp what Bitcoin truly represents, it's clear that it has the potential to grow 100 to 400 times its current value.
A significant portion of the world's wealth resides with individuals who may not fully grasp what Bitcoin represents. Meanwhile, many advocates of Bitcoin have been vocal, sometimes intentionally confrontational or provocative, engaging in debates about whether Bitcoin aims to replace banks, traditional currencies, or even governments. However, the essence of Bitcoin is simpler than these contentious debates suggest. Bitcoin is digital capital. It represents a new form of wealth storage and transfer that operates independently of traditional financial institutions. When we consider the addressable market for digital capital, it ranges significantly from $100 to $400 trillion. This vast potential demonstrates the scale of opportunity Bitcoin represents. Bitcoin's current market valuation suggests it has the potential to increase in value by 100 to 400 times from its current levels. This growth potential is staggering when viewed through the lens of traditional investments. Once you grasp this fundamental aspect of Bitcoin, that it's about digital capital and its immense potential, and many of the debates about its role in society become secondary. Bitcoin isn't necessarily about replacing existing systems outright. It's about offering a viable alternative and creating a more decentralized and efficient financial ecosystem. As understanding of Bitcoin deepens, its utility and value become clearer. It's not just a speculative asset, it's a fundamental shift in how we think about and manage wealth in a digital age. Whether you're a skeptic or a supporter, recognizing Bitcoin's potential as digital capital can reshape perspectives on its role in the future of finance. The true essence of Bitcoin lies in its capacity to serve as digital capital on a global scale, offering unprecedented opportunities for wealth preservation and growth. Understanding this opens the door to appreciating Bitcoin's transformative potential in the broader financial landscape.